So I'm going to just ask you some questions that I've been asked, and that so the first one would be: so what are the there's lots of different ways that you could set up in business, sole trader and limited company. What would be the pros and cons, and what would you recommend maybe when you're starting out? And you could just talk about the different options.
Yep, about 3 or 4 different options without going into too much technical sort of detail. You could be a sole trader if you're going to be in business with someone else, a friend or a husband or a wife. Then you can go into a partnership. If you make it a little bit more sort of complex, you could be a limited company, or even more complex, you could be a limited liability partnership. Right. So you might say, what are they?
Yes.
And what is the difference?
Yeah.
Sole trader is probably good for someone who's just starting out. So it's a small little business, it keeps things very simple. So really the business is you. So you are taxed on your sort of profits as you go along. We'll talk about sort of tax rates in a second. But it just means that you're actually taxed on the actual the profits you make. If you take £1 out of the business, you take £100 out of the business, £1,000, 10,000, 100,000 if you guys, then it doesn't make a jot of difference. You're actually taxed on the profits. It just keeps it a lot simpler when you're a sole trader.
And is there a limit to how much you can earn as a sole trader?
No.
No. Okay.
Sensibly though, sort of tax-wise, you wouldn't want to be earning too much because the tax rates for individuals are quite high compared to limited companies.
Right, okay.
So you want to move off over into a limited company. Probably that's what most people sort of do.
Okay.
Partnership is very similar to a sole trader. You're taxed on the profits as you go. Keeps things very simple. With a sole trader and a partnership, you can do some nice little, it's quite short accounts, so you don't have to do too detailed accounts. You haven't got too much in the way of accountancy costs or preparing the accounts, compliance stuff. So that's one of the advantages. They're a little bit cheaper on the sort of compliance side. Partnership is basically the same, albeit that you're in business with someone else, and then you share the profits between the two of you. Hopefully, make a nice profit, and then you're taxed on it accordingly, really, on the sort of profits. So fairly straightforward. I think certainly over the last few years, the tax rates between limited companies and sole traders and partnerships, they're known as sort of unincorporated sort of businesses, unincorporated entities, have really sort of there's been a big difference really. So whereas it was always better to be a limited company, that sort of differential's now sort of widened really from a tax perspective.
Right.
So a limited company is, if you're making some decent sort of money, a limited company is probably the way to sort of go really. Now there are other benefits of being a limited company. A limited company, firstly though, is not you anymore.
Right.
It is its own separate legal entity, and that causes its own issues in itself, because it's no longer you, albeit you're sort of controlling it and everything. There is a bit of a downside that they are a little bit less flexible than a sole trader, because if you want to take the money out of the business, you've got to find a way of taking it out by salary or dividends, but you can structure it so it's quite tax efficient. Limited company, though, you have to do a lot more detailed accounts, and there is a cost to that, unfortunately. You've also got to file the accounts at public record, at a company's house, so they're available on public records. So if someone wanted to do a search on your business, it's a limited company, they can find out some details. But these days, you can sort of file some quite short accounts, so no one can really say how you're doing. You're sort of using a decent accountant, I suppose, just tell you what to do on that sort of side. 3 main advantages I find with limited companies. One is the tax. There is a big differential, so you're probably better off if you're starting in business to probably be a sole trader to start with, and then we go into a limited company if things are going well. There's a tax saving, undoubtedly. Secondly, there's also, whereas on a sole trader or a partnership, you've got all your assets on the line, so it's a big disadvantage. So if you're in a business such as a builder, for instance, and you've got a bit of risk on what you're doing, say there's a claim against you, all of your assets are on the line, so they can see. So the house we're in at the moment, if that's your own sort of house, then basically that's on the line if you're a sole trader in a partnership. If things don't go well, there's a claim, or you've taken a bank loan, that type of thing. Whereas it's not the case with a limited company, it's all ring fenced within a limited company.
Because I was led to believe that now, as a limited company, as a director, you will still be held liable personally if issues. Or is that just because maybe it's not being put together properly?
Often there's a couple of things there. If you've got a bank and everything else, if you're looking for a bank loan, they'll often seek a personal guarantee anyway, so you've still got that sort of side of it. Yes and no. You still can get some personal liability, but you've got to. The only way you get it is if you did something fraudulently, in which case creditors and people can sort of peer through the company veil, as it were, and look at your assets. Or if you trade negligently, which really means if you're insolvent, you carry on sort of trading with no expectation of getting out of that position, then you assume personal liability.
Right.
But if you're not into that sort of area,
No.
so you're not negligently and you're not in that insolvent type sort of position and you haven't given any guarantees to anyone,
No.
then basically all of the risk is ring fenced within the limited company. And I deal with quite a few clients who do some riskier stuff. I think of one chap who does a diving business. So someone's got to go on holiday and have a bit of an accident. And unfortunately, there's going to be a great big claim. They might take insurance out. That'll cover him to a certain extent. But sometimes things are not going through the insurance. You might not get sort of be covered for something, and basically there could be a huge claim against him. So whereas for him, he's a very small level of trade. When he started, it made sense just to start up as a limited company. And thirdly, people often these days, even more so, I tend to find like dealing with limited companies. People feel safe dealing with limited companies. And you've got the PR side of things as well. People automatically think you've been going a while and quite big if you're a limited company. So you actually get the sort of the possibility of getting a little bit more trade really, more business than you would if you were a sole trader. And you find that quite a bit. For instance, got a lady who does what used to do sort of CVs, and she was at quite a low level, but she did it online. And basically, it just gave the impression that the business was bigger than it probably was really. So those are the benefits of being
So what would the costs, do you know, like rough costs between like what extra it would cost you to set up a limit?
It does depend on what you need, and the costs on sort of your accountancy services, sole trader, partnership or limited company depend on the level of service you need, who's doing the accounts and tax returns and how many meetings and that type of thing. We always price up front with people so they know what they're getting themselves into. But as a rough rule of thumb, the difference with costs compliance-wise between a limited company and a sole trader or a partnership, you're probably looking at about £500 more as a rough ballpark. Perhaps. Yes.
Okay.
And there's a cost of moving over to a limited company. Just to set up costs, you're probably looking at another, depends, sort of £500, I suppose, maximum, I guess.
Right.
That sort of figure. There is one other type of entity, is a limited liability partnership. It is it's sort of a little bit sort of complex, but it gives all the benefits of a limited company insofar as the risk doesn't go to the individuals. It's ring fenced within the limited liability partnership, but you pay tax at the partnership rates. So it can be a bit more expensive tax wise. Sometimes for big professional practices, then they tend to be limited liability partnerships because it's a little bit more flexible on sort of people coming in and out.
Right, okay.
So those are the four structures.
Yeah.
If you're starting off on business, unless you've got any of the, you're doing a risky sort of type of thing, or you think you're going to be dealing with people you're not going to get the level of business and trade and everything else, then probably what I'd suggest people do was start off as a sole trader or a partnership if they're doing it jointly with someone else. It went well, move over to a limited company. Quite easy to go from a sole trader or a partnership to a limited company.
Okay.
It's not quite so easy to go back the other way
No.
from a tax perspective.
Okay.
So that's your structures.
And if you were going to be a sole trader, would you be able to call yourself any name? You can call yourself, you can still have your business name and everything.
Yeah, you can call yourself your own name, you can call yourself a fancy name if you like, any name. The same actually applies to a limited company. You've got to pick a company, someone else can't have your company name. So it's going to be Joe Blogs, for instance. Someone else may already have Joe Blogs Limited, so you might have to say Joe Blogs, open brackets, Somerset, close brackets, Limited. But you could still have the trading name, so as Joe Blogs, as it were.
Right,
So you, on your headed paper and everything else, you'd still be Joe Blogs at the top of the big paper, but down the bottom you'd have Joe Blogs Limited, trading as Joe Blogs. So you can still pick any name you wanted to, really, under a trading name under each scenario. The only thing is with a limited company, you can't have a name, an actual name, which someone else has got. There are ways around it, because you can just sort of insert Somerset or UK if someone else hasn't got that sort of thing.
No. Alright, that's brilliant.
That's what we tend to do if someone else wants to pick a name which someone else has got. We just give a slight variation on it.
Right, okay. But then check that it's not trademarked.
Yeah, you just check on Companies House. It's like a 30-second check. Doing one the other day for someone, and you just check on Companies House website, and basically, if no one else has got the name, then off you go. Really,
Brilliant. Okay.
it's quite straightforward
That's
on the,
brilliant.
on the company name. And if you didn't like the name, say you didn't like it after, if you set up as a limited company, didn't like it, if you never fancy that name anyway,
Yeah.
it's very easy to change.
Oh, is it? Okay.
It costs £10. A
Is
bit of
that all?
paperwork.
Oh, okay.
Or the downside, more the downside is you've got to change all your letterhead and
Yes.
your websites and those types of things.
Yeah.
So, you probably hear a lot of this. I'd seek proper advice on setting yourself
Yes.
up
Yeah. Of
appropriately to
course.
start
Yeah.
with.
No, definitely.
Like I say, seek advice from a accountant.
Yeah.
So it can save you quite a bit if you get the right
I
structure.
guess if you're thinking of going down that route, just to book an appointment with a local accountant or yourself, and you can sort of chat it through and.
Yeah. And a limited company, it comes with it is its own separate legal entity, but it does come with some shares. So again, I've seen people who've gone off and done it themselves and come to us afterwards, and they've set it up with say too many shares, so they've got to put a load of money into the company to start with, which they didn't have to if they'd done it
Okay,
appropriately.
that's
So
a good one.
again, just seek some advice, just have a chat.
Yeah.
A couple of other ones recently as well, where basically they've gone off and formed the company themselves, but they've had a meeting with us to start with and just said this is what to do, this is not what to do.
Yeah.
And they've gone off and done it, and that's kept the sort of that cost down to as minimum as sort of possible, really.
Yeah.
We're happy to, well, I said any accountant would be happy to do the whole kit and caboodle
Yes.
for it and go for everything. But often
Yeah.
the best approach is for someone themselves to probably do it with a bit of guidance from us, really.
Okay. Well, that's brilliant. Thank you very much
So
for that.
that's your structures.
Excellent.